All right, let's look at Canopus. Canopus. Similar question, but slightly different. I deliberately brought them because your provision test is either coming in form of legal claims that we've done, or it's going to come in form of restructuring. There is no other way that it can come. It's only these two ways, right? Yeah. So look at Canopus. Canopus Co recently announced plans to fundamentally restructure its production processes due to a change in the focus of the company's operations. It has included a $2.1 million restructuring provision in the draft financial statement. The structure involves a refurbishment of the factories, the purchase of new plant and equipment, and retraining of existing staff. So see, I highlighted those things. Number one, there will be a refurbishment. Number two, there will be a purchase of new plant and equipment. And number three, there will be retraining of existing staff. They already said what restructuring is all about. So this question, if you want to answer it, you need to touch on those three things. Now, let me finish the last sentence. These plans were finally agreed at a board meeting in March 2005 and announced to shareholders and employees just before the year end. So, the criteria for restructuring has been made, the announcement has been made, the people that are going to be impacted, they are aware, right? So, the board has already approved and it's happening before the year end, all of that. So, which means restructuring provision must be made. Remember, you don't make restructuring provision if these three criteria have not been met. If you remember your standards, the announcement, number one, the approval, yeah, and everything is happening before the year end. Yeah. Any question before we go ahead onto the question, into this one? Okay. So now, bank loans. In readiness for the operational changes, the directors of Canopus decided to restructure the company's bank loans. So the restructuring a bank loan means that they had a loan before. However, they want to change the terms of that loan. So for the people that might be wondering, what does it mean? That's what restructuring of loan is talking about, right? So you had a loan, maybe you are paying monthly, you want to change it to annually, or you want to suspend principal for later dates or something, right? So very important to understand what that means, because if you don't understand, you cannot audit, like I always say. As a result, several long-term loans were repaid early and a new 10-year bank loan of 4.8 were taken out on 1st of January 2005. So this loan was taken during the year. Repayment of 150,000 are due quarterly in arrears, which includes interest. Now, A and B is asking us to audit those two situations. It's as simple as that. So let's audit the first one. Yeah. And the first one is that a provision for restructuring needs to be made. And we've said for provisions to be made, there has to be a plan that has been approved. Plan must have been communicated to the people before the year end. Okay. And in this scenario, all of that have happened. So the A part of the question wants us to come up with substantive audit procedures that auditors should perform to obtain sufficient and appropriate audit evidence in relation to that provision. Okay, so what do we have to do? The first thing we have to do in this case is to write a procedure. Think of those criteria. Those are the things you want to audit. Those things I put in red, you have to audit them because number one, you need to check that there is truly an obligation. Remember, that's an assertion. Existence. You need to check procedure for that. Existence of that, of all of that provision. And likewise, he said they are training people. He said they are refurbishing. They are buying new plant. We need to test that. Yeah, new plant, equipment. Yeah. The retraining as well. We need to test that. We need to put a procedure for that retraining. Very important. Yeah. And also the valuation as an assertion. So for assertions, we're looking at this as well, valuation, which is about the amount. Remember, valuation is about the amount. Existence is about validating the situation. Obligation is whether there's an event that actually creates that obligation that we must pay something in the future. Right. Then we'll look at all of this. And this question is 5 marks. So you can see, if you think like this, then it's easier for you to now start churning out your audit evidence. Yeah. First of all, is let's test for existence. And what is existence? There has to be an agreed plan. Yeah. That something has been approved to go ahead, that restructuring. So here, all you need to do in a situation like this is to obtain the board approval for the restructuring. So you need to obtain the board approval or the board minutes. Yeah, the approval is in the minutes. Yeah, yeah. Why? To confirm plan was approved. Plan to restructure. That's it. And that's fine with existing. Yeah. Likewise, obligation. That's where you are checking whether they've communicated it with the to the staff. Right. So we need to inquire. Yeah. Or so you can inquire client evidence of communication. Or you can even speak to some staff. And that's the sweet thing about audit. The same result, there's several ways of doing it, once it makes sense. So evidence of communication, why? To confirm that announcement to shareholders and staff was made. When the announcement was made, that was when the obligation has been created. Because at that point, the staff will now have an expectation that they will be trained, that maybe some of them might even lose their jobs and they'll be paid off and all of that. Yeah. So that this is obligation as an assertion. This is existence. And likewise, it said three things in this red that I highlighted: refurbishment of the factories, purchase of new plant and equipment, and retraining of staff. We need to check all of that. So let's deal with the refurbishment of factory. Yeah. So how do we know that the factory has been refurbished? We need to obtain sample invoices and agree values to the refurbishment cost. Check for accuracy. You can as well even inspect the place to see whether there was refurbishment done. The only problem why I won't advise you to do that is that you don't know how it looked before. So you visiting might not necessarily give you any assurance that it was refurbished. So checking invoices might just be the best way to see the nature of the item they bought and You see whether it's a capital expenditure and whether the amount is accurate. Yeah. And likewise, for the new plant and equipment that they bought as well, you need to also get the documentations for that, and that is the invoices. So likewise, you need to check for PPE. So you need to select samples of PPE addition in the GL, just like refurbishment, and agree to relevant invoices. Very important, and that takes care of that as well. But for the staff that they are trained as well, you need to speak to them to be sure that they are being trained truly. Yeah, so you need to engage or engage the affected staff. Why? You want to confirm if they are going through any training. You need to confirm all of that. So that is why I'm encouraging you to really pay attention to questions when you are reading your question in exams. Don't be in a rush. Don't be scared. Don't be worried. Even if you read for the first time, it looks a bit confusing, look at it again. Try and underline keywords that you can see and make sure that you are answering the question. You can see the same or similar question on provisioning, we're addressing it different ways because they are actually talking about different things. This time around, there's no legal case. Nobody's suing anybody. This is just people asking some people to go or changing these operations, and because of that, they are incurring some money. So that 2.1 that they have estimated as provisioning, we need to also audit it. Is it accurate? We need to check that that figure is correct, right? So which means we need to obtain understanding of the estimate, which is $2.1 million. So what do we want to do with that understanding? Because we want to check for reasonableness. We want to recalculate it. Yeah. So and recalculate. Because if we don't understand it, we can't recalculate our own. So and recalculate the amount other to check for accuracy and reasonableness. Yeah. This question is 5 marks, so 5 procedures are okay, but you have 6, so which is good. Any of these 5, any of these 6 rather is good, and you're good, you're fine. Any question before I go to the bank loan? I want to go to the bank loan now, which we discussed earlier as well on how to approach it. Now you've been asked to audit this bank loan. You can see they have that bank loan there, and we need to audit it. What are the procedures? I told you, think about opening, think about interest expense accrued, repayment made, and closing. My screen just crashed. Okay, I go back again. So I was talking about bank loan. Can you still see my screen? Because it crashed briefly now and it's back.
Yes, we can see it.
Okay. We accrue interest expense. Then we make repayment. And that is the closing. Yeah. But in addition to this, there are even more details in the questions that we also need to address. Because if they are doing a restructuring, we need to also get an approval that they are meant to do that restructuring. So that is even the first procedure I'm going to write. So obtain board minutes, which is the approval to restructure loan or take the new loan. If you remember, this is part of our procedure that we wrote, yeah, which can address opening. Because this time around, they collected this loan during the year. So we need to get that approval. There's nothing in the previous year. They've paid that off, right? In order to get this new loan that we are looking at. So once we get that, can send bank letter. Now let's do interest expense first. So I will just follow our schedule. Yeah, which is to obtain the so we're gonna obtain the loan agreement. Obtain loan agreement and recompute interest expense based on the terms based on the loan terms. Agree with interest in GL. So you can agree with or agree to the interest in GL. So you are agreeing that once you've done your calculation, you need to agree to the GL. That is the essence why you are doing that calculation. Right? So that takes care of this and this. Then the repayment, remember they said they made a repayment. As a result, several long-term loans were repaid early and a new 10-year loan. Yeah. So you need to trace the repayment to the bank statement, those early repayments. Yeah. So you trace the amount repaid. I've told you anything repayment or receipts, you trace the bank statement. The bank statement. Why? To confirm. Please never be tired to put why. Confirm outflow. Gosh. Right? Very important. So you've done interest expense, you've done approval, you've seen that. Then, so this is good. That's good. Now this one, the best thing to do is to send a bank letter. So send bank confirmation letter to confirm amounts hold. Very important. So we have one procedure, two, three, four. We need more. So you've sent back confirmation letter. You've gotten approval. You've been able to compute your interest expense. Yeah. And likewise, you've audited your repayment. What else can you do to have more procedures? You see, so when you talk like this, you keep thinking of assertions. You can think of classification assertions. We still have P and D that we have not addressed here. So if I'm going to talk about P and D, which is presentation and disclosure, I'm talking of where what kind of disclosures and where should the loans be disclosed in the financial statement, which is something I was talking about when someone asked a question, whether you need to mention PIL or financial position or something. So with this now, I'm going to write a procedure that is going to touch on that. And what am I going to say? I will say review financial statement and ensure that loans have been recorded appropriately as current liability for the portion due within a year. Because your loan, you always have to split it like that. And non-current liability for the portion due after 1 year. Also, all disclosures. You can even put this one as a new procedure. All disclosures have been made in line with IFRS 9. And that's it.